I'll make this video really quick. I have the Magic game in the background right now, so hopefully it's not too loud. But we had the game going on yesterday, and I guess the mic didn't really pick it up. So, as you guys know, Google came out with earnings today, and they beat consensus earning estimates. But they've actually crossed into negative territory after hours. What? I guess. Well, anyways, Google is crossed the negative territory after hours, even though they beat earnings, so that's not really a good thing. But you guys look at the chart, we have overhead resistance at this Fibonacci retracement value, but until we break that, we can't really see a move higher. So we do have like I guess like a chop zone right here. As you guys can see, I'll circle it real quick, but we have one there, and we have one right there where the retracement value is, which is right there. Value of 344.75. And also, Apple came out firing out of the gates today. And if you guys bought it as a trade after Steve Jobs stepped down, today was your day to sell. You know, for all you people who were in there, you know, as a day trade, you know, you go in there with a purpose. You know, I'm entering this trade with a purpose, and once a certain, I guess, pre-designated event happens, you have, you know, your notion to sell. So today was your, I guess, your chance to sell. I play like a little, I guess, like fantasy stock challenge game with some people I know. I don't personally hold Apple in any of my personal trading portfolios except for a few IRAs I'm watching over. But I took the chance to sell Apple in every single one of those portfolios today. Now, as far as the S&P futures are concerned, let me pull this up real quick. But these are, again, you know, the March 2009 E-mini futures contracts. But as far as on the hourly chart, pull it up real quick. Oh, good lord. Okay, there we go. As I said yesterday, we had some overhead resistance at the Fibonacci retracement value, but the chart's behaving pretty well to a lot of the retracement and fan values. But if we zoom in right here, we are running into some overhead resistance right here at the 840.61 Fibonacci retracement value. So we're going to have to break at least the top of that candle right there, which is, let me see, 847.25 in order, before we see a real, I guess, big push higher to at least this next Fibonacci retracement value of 872. But as I close this, I am still bullish for the short term, and one of the plays I did make before the bell is going long U.S. oil, which is the U.S. Oil Trust Fund. But you know, it is basing pretty well. Actually, let me get a daily chart up, but it is basing pretty well. But the one problem that a lot of the oil companies are having right now is that they're having a real problem trying to break the 20 and 50-day moving average. So I'm going to have to watch this very, very closely. But as you guys can see, you know, we have a lot of different places along this chart where, you know, right there, 20-day moving average, 20-day moving average. We have a break of the 20, but we found some resistance at the 50-day moving average. But again, you know, everywhere along this chart, even on the uptrend, it just obeys the 20-day and 50-day moving average. So, you know, hopefully we see a rebound in oil. Stochastics are in oversold territory, as you guys can see down here. And the MACD has rolled over right there. Volume is, you know, I guess somewhat healthy, but right there, but you know, kind of is a crapshoot right now. But I have my stop in place, so if I get stopped out, then so be it. But I will post some charts later on today. Well, actually, not later on today, but with this video. But I guess keep those in mind for tomorrow. Thanks, guys.